guys, it's Sarah Berry, CPA, Texarkana, Texas. Today is Monday, December the 28th, and this is part 2 of my videos. This will be the last one where I'm going through and explaining what I feel like is the important parts of the stimulus/appropriations bill that President Trump signed yesterday, December the 27th. So we have already talked about the rebate, the 600 or 2,000 amount that'll come to each of you guys, the PPP loan forgiveness not being taxable, and the new application forms. We talked about the EIDL. We talked about the COVID sick pay. So what I want to dive off into now is the PPP Round 2. So this is the Payroll Protection Program. So this is helping small businesses survive during this pandemic. Remember the first PPP, we found out about it in the CARES Act back on March 27th when President Trump signed that. And it was calculated based on your 2019 payroll. It would take your 2019 payroll, divide by 12 to get your average monthly payroll, multiply times 2.5. And that would be your PPP amount. Originally, they told us we had 8 weeks to spend about 10 weeks worth of payroll. So we kind of went into panic mode trying to figure out how we're going to spend all this. We had to keep our FTEs, our full-time equivalent employees, up to a certain amount. They relaxed the rules a lot. We had 24 weeks to spend it, 6 months to spend it. We didn't have to stress so much about FTEs because there were so many exceptions to the rules. Every single PPP we've done, we think is going to be 100% forgiven, and already probably 80% of the PPPs that we did have been officially forgiven by SBA. So first round of PPPs was amazing. You had to do a certification that due to economic uncertainty, this PPP was necessary. Now this second round of PPP is very similar to the first round, except for you have to actually have a decrease in sales. So some of my clients, depending on what industry you're in, some of you guys have actually done better in 2020 compared to 2019. So you would not qualify for this second round of PPP. So how much does a decrease in sales need to be? So let's walk through it. First off, no more than 300 employees. The first PPP was no more than 500 employees. So they're narrowing it down here. And by the way, I think it's $284 billion is how much money they've set aside. Yes, $284 billion has been set aside for this PPP round 2, or second draw loans is what it's referenced to in the actual bill. This is page 2064 for you nerds out there that want to go read it. So how much does your gross sales have to decrease? You have to have a 25% decrease in gross receipts for any one quarter in 2020 compared to the same quarter in 2019. So let's say second quarter is probably the hardest hit quarter for most of my clients. And depending on what industry, some actually is going to be the fourth quarter. But let's say second quarter of 2020, you would compare that to second quarter of 2019, gross sales, okay? PPP would not be taken into account on this. You're not taking into account any expenses, just your top line, your gross sales. 2020 compared to 2019, same time frame, has your gross sales decreased 25%. If they have, then you're probably going to qualify. So loans, PPP loans up to $150,000, you just submit certification attesting that the eligible entity meets the applicable revenue loss requirement. In other words, you do not have to provide documentation for the decrease in sales. That's what the bill says. SBA may come in and change the rules because sometimes they want to tighten the rules down and change it from what the intent that Congress had. We saw that with the first round of PPPs. But it also, the law says that you may have to prove a decrease in sales whenever you apply for forgiveness. See that on page 2079. So you don't have to prove that you have a decrease in sales to get the PPP, but you may have to prove that you have a decrease in sales to get it forgiven. So you don't want to apply for it unless you know that you truly do have a decrease in sales. And here I just want to put a plug in for you guys. I was talking to one of my employees today, and we were discussing businesses keeping up with their books and this new law coming out. And it really has come to our attention more than ever this year, the importance of small businesses maintaining an accurate, up-to-date set of books. Because if you don't, then you're not prepared to pull the reports and easily see, has my sales decreased? Can I prove that? Do I know that for a fact? Because I don't want to apply for this PPP if it's not going to be forgiven, right? I don't want to depend on this money and spend this money when I have to turn around and pay it back to the federal government. So it's really important. This is just one example. So important to have those books called up for your business so that you can produce financial statements at a moment's notice and know really what is the financial condition of my company. It's important all the time, but I think for a lot of you guys, it's become very transparent this year that it is important to keep up with your books. Okay, that aside, let's get back to PPP Round 2. Okay, so even if the business was not open for all of 2019, there's still some rules in place that you can qualify for this PPP. You could qualify for this PPP. So let's say that you did not open your business until October or November of 2019. Could you still qualify for Round 2 if you had a decrease in sales? Let's say you're a restaurant and you opened your business in October, November, December, sometime fourth quarter of 2019, but you were completely shut down for the summer of 2020, or at least March, April, and May, you were shut down, you had to have limited capacity. Your sales decreased significantly for those months compared to what you actually took in for the fourth quarter of 2019. You would expect that you would have brought in that or even more for 2020, but your business is now really suffering because of COVID. But if you look quarter by quarter, second quarter of 2020, yeah, sales was down, but you still had sales. If you compare it to second quarter of 2019, you're not going to have a decrease of 25%. So would you qualify for this PPP Round 2? Yes, you can still qualify for the PPP Round 2. So instead of comparing second quarter 2020 to second quarter 2019, you would compare second quarter 2020 to fourth quarter of 2019 when you were actually open. So that's just one example. There's all kind of rules in there that if you were not open for a period of time in 2019, they tell you exactly what periods to compare to see that 25% decrease to see if you'll qualify for the PPP. So how is the PPP calculated? It's calculated the same way as Round 1. Remember your payroll for 2019, divide by 12, multiply times 2.5. Just two things that change though. So actually, you can use your payroll for 2019 for the calculation, or you can use your payroll for the 1 year period leading up to the application. So that's basically your 2020 payroll, because SBA has like 17 days, I think, from the time this is enacted to come up with the forms and the rules, the policies and procedures for us to start applying for PPP Round 2. So 2020 is going to be over. It's going to be over in just 3 days. So we're going to be using 2020 payroll or 2019. You might want to use whichever one's more to get you the most, but you can do either or. As of this law, again, SBA might change it. So that's one thing that's changed with the calculation of the PPP loan amount. The other thing, so all businesses use the 2.5 times average monthly payroll, except for businesses that have a NAICS code that starts with 72. So what is an NAICS code that starts with 72? That is the food and accommodation industries, food and accommodation services. So if you fall into that category, then you're going to use the 3.5 times average monthly payroll. And that's on page 2073. And that you can do that at the election of the eligible entity. So I'm assuming if you're a restaurant, and you wanted to do 2.5 times payroll, you could do that, or you could do 3.5 times average monthly payroll. Everybody's going to want to do 3.5 times. And what I think they're doing is they're trying to make for sure that this money is going to the businesses that are hardest hit, decrease sales, and the hardest hit industries, because the restaurant and accommodations, motels, and things like that have been hit the hardest. Also, one thing in this PPP Round 2 that they have stated, page 2083, if your PPP for Round 1 could have been higher, you can go back and request that increase in PPP. So originally they said you get one shot at the PPP one time if you make a mistake on the application, or this happened a lot, they come out and change the rules. So they changed the rules a lot. On the original applications and on the forgiveness applications, they changed the rules. So we would, and they told us this money was going to run out, and it did run out. They funded it with some more, and they actually ended the PPP program with money still in the coffers. There wasn't even taken advantage of. But if we run out and we apply for this PPP, we got the money because we was afraid it was going to be gone, and then Congress or SBA come in and issued interim guidance, interim rules. And they would have a final interim rule. So many finals on there, you're just wondering what really is going to be the final rule. But they would come in, we would get a PPP, and we would use the rules that were applicable at that time. We did the best of our ability with the knowledge that we had, and the bank did the same. And then SBA would come out and say, well, you could have done more, we could have gotten more because you could have used X, Y, and Z, but we couldn't go back and apply for that client. They told us that we can only get one. Well, now they're saying if you could have gotten more based upon rules that come out after your PPP Round 1, then you can file an amended, like a corrected PPP application Round 1 and get those additional funds. So that's a good deal too. The last thing I want to talk about on this PPP Round 2, there's a lot of stuff here, but I'm going to wind up this. Farmers, if you're a sole proprietor, independent contractor, or eligible self-employed individual. In other words, if you're a 1040 filing a Schedule F, and it may actually apply to a partnership, a farm that's a partnership. I'm not clear on that because I'm just reading the letter of the law, and sometimes it can be confusing with self-employed individuals, and partnerships sometimes qualify as self-employed individuals. But if you're filing a Schedule F, you can look at your gross 2019 Schedule F and use that as your, you can take your gross sales divided by 12 and multiply times 2.5 and base your PPP on that instead of using your net. Everybody else has to use the net, but for farmers, they're allowing you to use the gross. This is going to affect a lot of my farmers that file Schedule F. Most of my farmers, they do have a great amount of income, but lots of times they have a loss because their expenses outweigh their income. We can go back and get you guys a PPP, a sizable PPP. Even if you got one the first time, we can go back and get a second one and increase that amount based upon your gross sales. So that's your sales before we deduct your expenses. So this is a great thing for the farmers. Okay, so that's going to wind up really what I wanted to talk about. The employee retention credit, I'm not going to get into that. That has been extended through July 1st, but I really don't think it applies to most of my businesses. There is a ton of stuff in this bill, and I have just covered what I feel like is most applicable to you guys and us in this area. But I do want to add a little commentary before I leave here. Let's see. Couple other things. If SBA is making your monthly SBA loan payment for you, because they are making payments to themselves on your behalf, it's not taxable income to you. Educator deduction of $250 now includes PPE and disinfectant. Well, most teachers spend way more than $250 anyway, so that's not a game changer. SBA is now offering low interest loans as refinancing options for businesses, so I'm hoping that's going to be a great option for some of our clients. Wind this up. So my opinion is that the IRS is going to have to go back and rewrite the 2020 Form 1040. I think we're not going to be able to e-file tax returns probably until the end of February. I really feel like that tax season, the normal April 15th deadline, is probably going to be extended and possibly even until July 15th again this year. So It's very possible that we're going to have a long tax season again this year, and we're going to be focused on getting you guys all the PPP money that we can, all the grant money coming in from different sources to help you guys survive. Thanks so much, and Happy New Year.